It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Thursday evening, June the 2nd, 2016. Cruising our way through this first week of the month of June. Got another exciting newsletter for you tonight. Our favorite markets are gearing up ahead of the non-farm payroll report due out tomorrow morning at 8:30 Eastern Time. Crude and the S&P are both pretty bullish, while the gold and euro are bearish and trying to hit some targets as we go into the last day of the week, as we go into Friday's trading session. Got a great newsletter in store for you guys tonight. We're going to grab the calendar. We'll look at the news for tomorrow. We'll check out the charts. Before we jump into the video, though, I do want to remind you the only place to watch the full-length version of our newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. Follow that link. Come join me here on the blog at sidewaysmarkets.com for the full-length version so you can see all the analysis for tomorrow's session. While you're here, don't forget, grab your free pass. If you're not a member here at School of Trade and you'd like to grab a free pass, come out and test drive our live trade room as a guest. Grab a copy of that. Grab your free pass in the upper left-hand corner. Don't forget to register for the mailing list. Lower left-hand corner, join the mailing list, name, email address, check your inbox. I'm going to send you a verification email, and I'll send you an email every evening when the nightly newsletter is ready to go live. Right below the video tonight, don't forget you can download all the charts and have them ready for your trading session tomorrow on your computer. Follow that link below the video on the blog to download all the charts and have them ready for tomorrow. And don't forget, you're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. Join the trial membership on the right-hand side. And don't forget, if you have any questions, I'm here to help every step of the way. Hope you guys had a great, kind of a short week here, right? Monday was a holiday. Hop, skip, and a jump. We're going to Friday's session tomorrow. Got a lot of really big news on the calendar, and we do not have to wait for tomorrow. It's going to be coming out here in just a few hours. We've got the General Services PMI coming out in China, and then, of course, PMI Composite shortly thereafter in Japan tonight. So tonight, again, the second day of the month, tomorrow being the third day of the month. If you're trading the Asian session tonight, into the Asia session, Australian session tomorrow. Don't forget, you get General Services, 9:45 p.m. Remember, anytime we hear from China right now, it's definitely shaking things up right now. Japan, I love you guys, but probably not going to be too big of an impact there at 10 o'clock news. We're definitely expecting to see a bit of moving and shaking from that 9:45 p.m. Eastern Time news. Now, I would expect, though, tomorrow, I would expect this evening's news to be a little bit subdued, just because we do have some pretty big, hefty news coming out tomorrow. All eyes, of course, are on the employment situation tomorrow morning at 8:30 a.m. So everything we talk about today regarding news and regarding the schedule for tomorrow, everyone's watching that 8:30 number. It's the biggest number we get every month. The first Friday of every month, as long as the first day of the month is not a Friday. And of course, that comes tomorrow, Friday, June the 3rd. As you can see, we do have a slew of economic news coming out during the London session, 3:50 from France, 55 minutes past the hour of 3 o'clock. From our friends in Germany. The big news tomorrow morning out of the EU session will be the PMI composite from the ECB, and of course retail sales at 5. But again, all of that should be relatively subdued ahead of that 8:30 a.m. employment number tomorrow, the non-farm payroll number. So just be aware, we do have kind of a peppering of news. 9:45 tonight, 3:50, 3:55, 4 o'clock, 4:30, 5 o'clock tomorrow. I would assume, though, again, a lot of that's going to be very subdued ahead of that 8:30 news number. After we get through 8:30, then we have some pretty open space here, though. After we hit 8:30 tomorrow, that's when the bulk of the consistent opportunities are going to be showing up tomorrow. We know that most of the world will be sitting on hands until we hear from that till we hear from the employment situation tomorrow morning. Afterwards, you'll notice we have a nice clear window of opportunity until we get to 10 o'clock. So hopefully we'll get a nice big opportunity tomorrow morning after 8:30. By 10 a.m., we got factory orders, non-manufacturing index coming out at 10 o'clock, and then we go into Friday afternoon, right? Remember, on a Friday morning, we're done at 11 o'clock getting into new positions. My rule of thumb for a Friday is always get in early and get out early. Get out of those trades here. You're more than welcome to hold positions into the afternoon session, but I'll never recommend getting into new trades after 11 o'clock because remember, the psychology going through the markets At the end of the day, at the end of the week, at the end of the month, at the end of the quarter, at the end of the year, traders take bigger risks. They're either digging themselves out of holes or they're trading with quote-unquote house money. Although I do not agree with that, that is the reality of the world we live in. So tomorrow, careful before 8:30. After 8:30, though, that's going to be go time tomorrow. No matter really where you are in this world, it's probably going to be a little bit subdued ahead of that 8:30 news tomorrow morning. And then you got that, that window there from 8:30 till 10 o'clock. 10:30, 10:45 should start slowing down tomorrow. And then, of course, 11 o'clock, we're going to be calling it quits, heading out to the weekend and having a wonderful summertime weekend. Now, of course, we passed the Memorial Day holiday. If I don't see you guys tomorrow morning in our trade room, you guys have a great weekend. And, of course, we'll touch base on Monday again for the schedule for next week. So 8:30 tomorrow morning, all eyes on the prize tomorrow morning after 8:30 a.m. Eastern Time. Between 8:30 and 11 a.m. tomorrow, that's going to be our sweet spot. Looking forward to seeing you guys tomorrow morning live in real time in our trade room at 8 a.m. Eastern Time. What do we got here tonight? Crude, S&P, gold, and how about some euro? Crude oil is bullish and pulling back off the highs of a bull channel this evening, which means buyers will be waiting at the channel lows for the next reliable buying opportunities tomorrow. We have a couple good clues on this chart right now, upper left-hand corner. We got some technical clues here to work with. First of all, the bull channel. This bull channel, if you're a student of mine, and if you've gone through our intermediate classes, you know that this is not really the correct way to draw the channel, right? It doesn't fit the rotation requirement. As you'll notice here, what I'm doing is really the channel should be drawn either like this or like this, and either way you slice it, as you can see here, it completely overshoots and just keeps on going. Really, the giveaway is this spike in channel. We don't see this very often, where we see a spike in channel that breaks and goes higher, right? That doesn't happen very often. That's relatively rare, and that definitely tells you that they're expanding this channel a little bit, right? Remember, this is where I remind you that traders will do anything to find any area of resistance they can use, and it looks like they latched on to this one back here. So although this channel does not fit perfectly, and you're going to see another doozy on the S&P chart tonight, although this channel does not fit perfectly, as you can see, though, the highs do line up pretty well, and you can see they're definitely using those highs here right now. So although it's not the ideal, it will have to work for now because there's really no other way to draw that bear channel. What does that bear channel tell me, though? Rotation, right? So now we go from the high down to the low, up to that high. Where are we going next? Down to that low, and then where from there? Back up to the high. Channel rotation. Channel rotation. What else do we see here right now? Trading ranges. Got a couple trading ranges in the chart. There's really two of them here right now. We found this one this morning. If you remember this one this morning, we talked about this as we were waiting for that inventory report to come out, and then blammo, just takes off and torches higher. Pretty typical for an inventory number. We know that trading range will be a magnet. Right? If price comes back down, we'll use it as support. But really, the most important range I see on this chart is going to be in the short term. Now, in all reality, kids, you could really draw this as a triangle. You could look at it as a triangle. But again, remember, everything we do when we talk about this inside the intermediate classes here at School of Trade, it's got to pass the rotation test. High to low, low to high, high to low, low to high. And as you can see here right now, we are breaking out at the low side right now. Now, take that trading range, expand it down. There's your range expansion down. There's your range expansion right up. So that becomes key support. 48.83, that's key support. All of the levels are support and resistance, right? So, of course, bullish move into that trading range. That tells me now to be a buyer at the low of the range. Seller failure back up. Ideally, what you're looking for is for a move down to that range support, and then back up you go. Whenever we have a trading range, remember, there's a bull bias going into that trading range, right? Bull bias going into that trading range. We want to look for sellers to fail at that low and then buy it back up. Remember, trading ranges like to use the pendulum swing. Yeah, I told you. We teach all this stuff in the intermediate class. Pendulum swing, of course, puts us now on the opposite side for the target going the opposite direction. So where are we right now? Right now, we are bingo. We're right there. So all we need to see right now is see those sellers try to sell this pullback. If they fail, there's your short-term buying opportunity back up to the high of that channel, high of that range. And then remember, don't forget about the pendulum swing. That'll push this price right up to the opposite side of that pendulum swing all the way up. And of course, take that trading range, project it higher, and that makes for an excellent target overhead. All right, so we look at this trading range, bull bias into it. There's your range. We've now broken down. Look for those sellers, try to sell it again. When they fail, that's your buying trigger, right, to look for the price going back up to the range high, back up to channel high, back up to, of course, the ultimate target up here at 49.58, which would be that range expansion. The ideal scenario, though, will be to get this price down around these lows. So we'll see if it pulls all the way back or not. Again, short-term buyers, seller failure on the way up. Long-term buyers, we look at this as a definite bullish market right now. So we have to assume that below every one of these swings, buyers will be waiting. We talked about this in last night's newsletter, right? If you go back and look left here, remember that big move from yesterday's chart, right? Remember how we said all of these swings are going to get bought up and eventually get back to that high? Yeah, they're gunning for that right now. So we know this market's bullish. We know there are buyers going to be interested at all of these swing lows. Where would the ideal level be? Well, down around the low of that channel. Unfortunately, though, I don't get a chance. I don't have the choice of that. So all I do is look for those prior areas of support, look for those moves lower, seller failure, and right back up. Remember, we get a big news event tomorrow morning at 8:30, so that may definitely cause this market to sit sideways until that time comes. All eyes will be on the 8:30 a.m. non-farm payrolls tomorrow. Measured moves, also a really important clue right now. We talk about this all the time in the newsletter. We cover the trial pretty extensively as well. A, B, C, D. This is a very good example of a measured move with a trap low, a little trap low right there, and then back up to the high. Very good example of a measured move with a correction back to support and then a double top up. That double top, as you can see here, did not retest that high. They may be still trying to gun for that high, but we definitely know now that, of course, that measured move, the correction lower, has been taken care of, so sellers will have a little bit easier job bringing this price back down to give those buyers a chance to wind up into this overhead. Heads up for that triple up overhead. That'll be an easy target. Again, all these areas of overhead resistance will be targets for those buyers. Remember, as this price pulls back, all of these areas of support are going to be interesting spots for those buyers. As the price pulls back, sellers try to sell. If they fail, failure into strength, strength into pullbacks, and pullbacks back up to that high. As of right now, short-term buyers have a window right now as they trap low below that bull trading range. Look for those sellers, try one more time and fail, and that'll give you a short-term buying opportunity right back up. But be aware, we're looking for those deeper corrections here, right, for the most reliable opportunities here coming in tomorrow. Remember, those buyers are going to want to get this buying low. They're going to want some meat on the bone here, so we definitely want to see this price pull back a little bit further. We'll be trading this market live in real time tomorrow morning. Come out and join me in the trade room, 8 o'clock Eastern time. Let's keep moving. Even the S&P is bullish on the way to the highs of an expanding bull channel, which tells the buyers to stay patient for the best opportunities at support levels listed below tomorrow. Here's another example of a bull channel that is expanding itself out, right? Buyers are trying to force itself out here. You'll notice really the best way to draw that bull channel is real nice and tight like this. And of course, you'll notice here, though, after we broke and retested, we're going up now for another leg higher. So combine that with the fact that the midline appears to be sitting tight there right in the middle. We're going to use the high of that. And just like we said for crude, bull channel off the lows, we'll use those highs to expand out that bull channel. And that gives us a nice target up around the high of that bull channel. It doesn't exactly fit the rotation test, right? And it really doesn't. It doesn't fit the rotation test, but the reality is if we draw the channel like this, you'll notice we're getting one overshoot, double overshoot, and a triple overshoot. Now, triple overshoots don't usually happen. Usually what happens is when we see a triple overshoot, it tells us we get the wrong channel. They're trying to expand out that channel. We saw the exact same situation this morning in the trade room on crude oil when crude was tumbling lower and it overshot once, overshot